are you doing investing in the stock market? 401ks, IRAs, mutual funds? Is that really working for you? You feel like a winner when they go up. You feel like a loser when they go down. The bigger question, how long is this going to last? When is the market going to come back? When are you going to recuperate your losses? Is it going to be 6 months, 12 months? I have a very accurate prediction for you, all coming your way next.
One shot, now the future is yours. Go!
We were all raised and told that the stock market is good, that it makes sense, that it's a smart place to put your money, either in a mutual fund or an index fund, a 401k, an IRA, the S&P. It's more or less all the exact same thing, right? All of these blue chip companies that have had their heyday, they're now consistent. The top 500 companies, put your money there. That's the smartest thing that you can do with your money. And really the question is it really? Is it going to get you where you want to go? Is it going to facilitate the retirement that you want? And with the market going up or down, when's it actually going to come back? And I've got an answer for you. First, I need to start with some broken promises because you've been told certain things about the stock market. For example, everyone thinks that the S&P averages 10% on your money. And people think, wow, 10% compounds over time. And if I do that for 30 or 40 years, I'm going to have millions of dollars, right? Even though 3/4 of Americans have a retirement plan, as in an IRA or a 401k, etc., the average American only has $140,000 saved up. This begs the question, is that 10% annual ROI advertised by stock market advisors even true anymore? This comes straight from Vanguard. These are the guys that actually want your money in 401ks and IRAs. It's kind of a ballsy article that they're putting out there. But years ago, someone sat down and basically showed me the math. And they said, hey, Kris, I got news for you. When we talk about 10% in the S&P, what they're doing mathematically and algorithmically is they're factoring the money that goes up, but not necessarily the money that goes down. Uh-oh. What does that mean the actual ROI is? What market analysts don't tell you about the 10% average ROI for stocks is that you have to be invested heavily in dividend-paying stocks and reinvest earnings. The average stock market ROI since 1970 is actually only 7.5%, all while an average 4% inflation over the same period of time, making the adjusted ROI closer to 3.5%. And I got news for you. Your money growing at 3.5% for 30 or 40 working years, it doesn't turn into millions of dollars. On average, a person at 65 years old has $255,000, which means you may have been duped and investing in something that isn't working only to wake up a couple of decades from now and say, oh no, I'm screwed because I just believed what I was told. I got news for you. This is your wake-up call. There's something very different in this economy you need to do with your money. It's not the stock market. But Kris, what about Warren Buffett? That dude became a billionaire for the first time in his 50s. He's now worth so much money. Didn't he do it all through the stock market? Warren Buffett's stock investment strategy is much different than the typical IRA manager. Buffett built his fortune off of active investing, not dumping money into an index fund. Let me help you understand the difference. Most people will take the lazy approach. They say Apple, Tesla, the top 500 companies that are out there, they already had their asymmetric rise. They're now one of the big boys. They're out there crushing it, loading up on profits. And when you get in at that trajectory, all they're trying to do is maintain a little bit of growth year over year. And when you average all 500 of those companies out, what you get is an index approach. You're basically saying a little bit in all of them averaged out, we now know produces 7.5%. That didn't make Buffett rich. The dude's old, but he did something different. It's called a moonshot, or investing in a company with asymmetric upside. It's like investing in Netflix 21,000 ROI % ago when they were still shipping DVDs in the mail. He would investigate companies like that, research them, find them, invest in them, and when they shot up, that's how that dude made all that money. In other words, he was leveraging the stock market as a vehicle for investing in these companies when they had very low market evaluation, or you may have even heard things like the penny stocks that then shot up through the roof. A very, very different strategy than investing in mutual funds or index funds. By the way, 95% of mutual funds have lost money, which means they don't actually work. So the problem with 401ks and IRAs is that it's an accumulation mindset. It basically means save your pennies. If you set money aside, put it in a savings account, put it in a life insurance policy, and what you're doing is putting your money there, earning very low yield and saying, this is smart because over 40 years, I'll save enough, right? If the average person with retirement accounts today has $140,000, think about it. That means if that's the average, then at retirement, they're gonna have $200,000 or $300,000. Does that sound like a lot to you? What's broken is that it's an accumulation mindset. What you should be doing is actively investing your money. This is what Business Insider has to say about it. Here's how wealth is actually built. According to Business Insider, the Saver Investor track takes over 30 years of living below your means to build up any serious retirement. Real wealth isn't made pinching pennies. It's made through entrepreneurship and investing in real assets which appreciate faster than the S&P. This last year, I invested in a number of companies that had the potential to go huge, like Nvidia. Man, have you seen what's happened to that stock chart? I got in on that 18 months ago, and now backed by AI, it's crushing it. Was that an accident, or did I do certain market research to be able to do that one on purpose? Yeah, 100%. I had some other exits last year on some great companies that have shot through the roof. This is an active form of investing, and there's something I think in this economy that's even more important than that, and it has to do with something you've probably subscribed to this channel for. Let's talk about the power of property. Especially in an inflationary market, real estate offers the perfect balance of cash flow, value appreciation, and the ultimate hedge against inflation that the stock market just can't keep up with. This house right here, it's physical, and lumber only costs more with time as a commodity, and so does the drywall, and so does the steel in this house, and so does everything that you're looking at. This is what is called real property. You think it's real estate, but the root word there is real, R-E-A-L. A stone is real, jewelry is real, fine art is real. This house is real. And when you have high inflationary times, which only comes every several decades, you have the opportunity to buy something that is real. And those are the things that work opposite. So while the 401k, IRA, and other soft accounts are going down in value, guess what real things do? They increase dramatically, they go up in value. Even if you're talking about semi-precious metals, you're talking about silver, you're talking about gold, those things will go up. But real estate will go up in a low economy. It'll go up in an inflationary economy. It's always going up. But there's a huge problem with real estate, isn't there? It kind of sounds like a job. It's like, Kris, you want me to go buy something I don't really understand. You want me to deal with tenants, and then you want me to manage that property with time. I mean, even if I'm hiring a property manager, Kris, that's too much work. I got a family, I got life, I got a job and a career. That sounds like too big of a part-time something. And if I do it wrong, it feels like I could lose my shirt. You're not wrong. The secret is to find someone that has a lot of experience, someone that has $2 billion worth of experience. I've been through 2 different recessions, and watch this. 2008 was the worst recession we ever experienced. Everyone said, don't invest in real estate. I had the time of my life, bought thousands of homes with and for my partners, and in the next 5 years cleared over $100 million in profits. My number one regret, I didn't do more of it. We're now in this recession. Guess what I'm doing? I'm buying as much real estate as I can, because we're missing 5 million homes. And if we want a new president, they're going to have to bring rates down. And when that happens, the supply-demand issue is going to skyrocket real estate. And the question is, will you be the holder of any of it? Most people, when they get to retirement, they've got more net worth in the equity of their home than their retirement accounts. You want to know what their number one regret is? They wish they had bought more real estate. If they had a time machine, they would. That doesn't have to be you. Look at you. There's a solution on how I can help you do this. Every year, I buy hundreds of homes with my partners around the world. I've done over 6,000 different transactions, and let me show you my track record over the last 20 years. I know how to consistently produce, as a goal and focus, a 25% annual ROI. $50,000 at 25% over 20 years produces $4.3 million. Or if you're earning 34% that we've seen a lot of in the last several years, we're earning $17 million. So it may not be get rich quick, but it is most certainly get rich. And if you're interested in making sure you wake up 10 or 20 years from now to a pile of money bigger than what a 401k, IRA, or the stock market ever could be, click the link below, learn about partnering with me. Let me show you a beautiful alternative. And here's the best part. Come here. I'm going to do 100% of all the work. You put up the dough, we'll split the profits, and I will make sure that we grow it in the best markets on the best deals, period. If that sounds good, click the link below, get with me and my team. If I become your partner, you're gonna have my cell phone, and we're gonna do this thing. Listen, if you've been big on the stock market and you're thinking you might need to reconsider your strategy, consider the merits of investing in real estate, I've created a video for beginners on how I make millions of dollars in the game of real estate. Click right here, watch this video, let's get started.